Good morning, all you magnificent melon heads. Happy Wednesday, everybody. Today is December 18th, 2024. And I hope all you guys can hear me at this point. I didn't leave my soundboard on mute this morning like I did yesterday. Sorry about that. Top story this morning. Well, we got the whole Federal Reserve thing that's coming. Not really the top story, though, the Fed, right? They're going to cut 25 basis points. Whether they should or shouldn't, it's pretty much a done deal. It would be a shocker if they didn't. And I don't think that's going to, they're probably going to cut 25 points today. So that's not really the big deal. You want to look out for the dot plot and what they forecast for next year. But really the top story, it's a rumor that started swirling yesterday. We still don't have any actual confirmation of it. We don't have anything concrete. Neither company has confirmed or denied, but Nissan and Honda are supposedly exploring a merger. And while you're at it, because Nissan is a major shareholder in Mitsubishi, it would basically create this new Japanese auto conglomerate, Nissan, Honda, Mitsubishi. It would be the third largest automaker in the world if it happened. Now, Nissan stock was ripping higher yesterday, 23% to the upside on that news. Still down big for the year. Nissan has had an awful year. Their earnings were down big time in their last quarterly update. I mean, it was just an absolutely dreadful report. The company has recently announced 9,000 global layoffs. I believe it was close to 20% of the company's workforce. Don't quote me on that figure, but it was a major reduction in their workforce. So mass layoffs, big reductions in earnings, bad bets on EVs, and it's leading to consolidation. These Japanese companies are looking to get together to form what would essentially be the Japanese equivalent of a General Motors. I mean, you're talking about a lot of different makes and models all being brought in under the same umbrella. So, guys, I don't really know what this means for the industry as a whole. I can tell you over the last couple of weeks, there's been some very interesting dynamics in the auto industry. Obviously, the EV bubble is going burst. That's nothing new. All the money from the Inflation Reduction Act that's been shelled out for battery plants and new EV factories, all those plans are being either shelved, slowed down, or outright canceled. On top of all that, we're seeing a big reduction in production. Almost weekly, we've had some story about some automaker that is furloughing or outright laying people off, canceling expansion plans, shutting down factories for a couple of months in order to normalize. We've seen inventory continuing to rise at the dealerships. So lots of bad news in the auto industry, GM being the one exception. GM has still managed to put up some pretty good numbers while all the other automakers have been floundering here. Now, on top of that, though, in the most recent CPI data, we saw some very interesting numbers. We saw new car prices are now rising again for the last couple of months. Used cars, prices rising again. So while we're seeing climbing inventory and reduced production and mass layoffs, the cars are still getting more expensive, which probably has a lot of people out there shaking their heads saying, what the hell, man? And I'm with you. That doesn't make sense to me unless maybe they're curtailing production so much that it's creating shortages, driving price of vehicles higher. But we don't really see that in the inventory data, at least not the anecdotes of the inventory data from our dealerships. So the auto industry is pretty peculiar right now. And on top of that, yesterday we got that retail sales data. We saw a big increase in retail sales. It was almost entirely made up of auto sales. So I think it's probably time within the next couple of days or weeks, maybe we'll bring my buddy Tommy from Car Concierge Plus back on the channel to see what he's seeing in the auto industry. Is there a sudden surge of buyers? Are the cars on the road just finally so old that they're all dying and people have no choice but to pay these prices for new cars? I don't really know what's going on. But I can tell you major consolidation among automakers, such as this Nissan-Honda merger, is not going to help things, because whenever you get consolidation, you get less competition, and so less incentive for these auto producers to make vehicles that people want or can afford. So you could see a reduction in variety in the horizon here. Now, also going on this morning, another big one. It's from across the pond over in Hong Kong this time. We've got New World is one of the biggest developers in Hong Kong. They are at risk of default. There was this story in Bloomberg this morning, kind of caught me off guard because we haven't heard a lot about Chinese, I know this is a Hong Kong story. It's not necessarily Chinese, but I mean, the lines between the two countries are getting very blurry these days. Just ask somebody who lives in Hong Kong. We haven't heard about one of these Asian developers going belly up in a while. And then all of a sudden, New World has all this bad news this morning. They're in talks with some of their debtors to change or extend the due dates on several loans. They've got $28.3 billion US dollars worth of liabilities. That's a huge pile, not quite on the scale of like an Evergrande, right? They had like 300 billion. So this is much smaller than Evergrande, but still another developer is at risk here. They've just posted their first annual loss in 20 years. Now, the first annual loss in 20 years, and then all of a sudden, all these debt problems, that doesn't pass the sniff test. So that to me suggests that they've been cooking their books for several of the last few years, because what developer in Hong Kong didn't post a loss in 2022 and 2023? You're kidding, right? So you probably got some accounting irregularities going on there. Some of their bonds are trading at 40 cents, 60 cents on the dollar. They're also asking for a waiver on some of their debt ratio covenants that would automatically trigger payback provisions in some of their bonds. So they're basically saying, like, we're up to our eyeballs in debt. And I know we promised you if that ever happened, you could demand your money back right away. But we're asking you not to do that. That's not a very confident company. And I tell you guys, the last paragraph of a Bloomberg article, you always find tasty little nuggets in the last paragraph. They always slip the really nasty shit in the last few sentences. Their CEO abruptly resigned last month. Shocking, right? Shocking turn of events. The CEO abruptly resigns, and then a month later, first loss in 20 years. Our bonds are trading 40 cents on the dollar. We can't pay our money back. Please extend our loans. Don't trigger our debt ratio covenants. Somebody's going to end up in bracelets here. This is definitely going to end with somebody in handcuffs over at this Hong Kong developers, not Chinese. I'm trying very hard not to refer to this as a Chinese developer, but guys, this is an extension of the Chinese property crisis. Another big story going on this morning, maybe not a huge story, but it's a story I'm really sick of hearing about. This nuclear startup called Oklo, all right, OKLO. They signed a big agreement with a data center operator called Switch today. This is for 12 gigawatts of new nuclear reactors to be built through 2044. 12 gigawatts, guys. 1 megawatt is enough to power 800 homes. So 12 gigawatts is something like 9 million homes worth of power Oklo says they're going to build. Now, this is, huge deal, huge story, right? Oh my God, they're going to build 240 of these 50 megawatt micro reactors. What are they? They're talking about, millions in power. The stock is up, I believe 14% was the last I've seen. Here's the problem, guys. Oklo, they're full of shit. I don't know how to tell you this, all right? Spent a little bit of time in nuclear power, as you may know. Has worked in nuclear power for 15 years. This is another non-binding agreement, which means we put some words on paper and we don't have to do any of them. That's what a non-binding agreement is. It's not binding, as in no binds here, like it's bindless. It means it's not an agreement. It's just words on paper. Oklo is not approved to build one nuclear reactor. Oklo submitted an application for design certification to the NRC in 2021. It was rejected. They submitted a revised application. It was rejected because they didn't change anything in their two applications. The NRC basically said, your application sucks. You need a lot more detail. They submitted another application and the NRC says, what the hell are you doing? You haven't added any of the new detail we asked for. Guys, the Nuclear Regulatory Commission is not your typical government bureaucracy. They do not screw around, and they're not going to let little things slide, and they're certainly not going to let big things slide. In other words, Oklo is nowhere near ever building a nuclear power plant right now. And yet they're like, well, we signed this non-binding resolution for a gajillion reactors by some year, and this market just starts buying up their stock. Now, of course, Oklo, Sam Altman is on their board of directors. He's one of their big backers. He owns a whole bunch of the shares in this company. Let me just tell you, Sam Altman should never, ever be allowed anywhere near the keys to a nuclear reactor. The way that MFer does business, the way he fires people who raise safety concerns, the NRC is not going to let him build and operate nukes. It's just not going to happen. But yet people are like, oh my God, data centers, AI, nuclear, it's perfect. Who cares if they ever get built? Who cares if anything actually works? Just buy the stock. That's the story. It's another story of hucksters selling stocks. It's getting a little long in the tooth, guys. General Mills is making news this morning. Also, they're cutting prices. They reported earnings that were okay. Revenue up 2% year over year. Adjusted earnings beat by a pretty good margin. Their operating margins a lot higher than they were a year ago. And now General Mills, though, they're cutting their profit forecast for next year, and they're saying we got to cut prices. So a little bit of a dent in the narrative that I've been spinning, saying I think inflation is going to make a comeback here, that the Fed started cutting too early, and now we're probably going to see higher inflation. Well, General Mills is saying if we want to maintain our profits, we got to cut prices. So the solution to higher prices is higher prices. People can't afford Cheerios. Who had that on their 2020s bingo? And, of course, Congress is set to approve $150 billion worth of funding in this latest bill that is working its way through the legislative body. It's a 1,500-page bill that Congress has something like 72 hours to read and then vote on. The bill includes $100 billion in much-needed hurricane disaster relief, along with $10 billion for farmers because Congress didn't pass a farm bill this year as they normally do. This will fund the government through March. Yes, the debt gets bigger. The hurricane relief, guys, I've seen this before. I saw this with Hurricane Sandy, and we've seen this with other things. Anytime the government throws billions of dollars in relief aid at some package, it usually ends up with much of it being just outright embezzled and stolen. So hopefully they're a little more careful with the wording of the bill this time. But I can tell you my friends Travis and Melody have been doing a lot of work down in the Southeast, trying to help with the recovery from the hurricanes. It is very much needed. I just hope they're careful with how that money gets doled out. We got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in these markets. Don't forget that like button for the algorithm if you feel so inclined. And if you're new here, hit subscribe because we do this every morning. So come have your coffee with the melon heads as we go through markets. And, guys, I know we had the bull in the thumbnail this morning because when I posted the stream around 8:40, all three indexes were deep in the green. They were all making money. And then 8:30, I'll be honest with you, I'm not sure what data point came out at 8:30. We did get some economic data this morning. What was it? Our balance of trade, or whatever they call it, the general account, big trade deficit. It got pretty big. That could be what's causing this sell-off at 8:30. Housing starts were down a little bit. Housing permits were down a little bit. So we had some negative housing data. We had some bad trade data, but none of it was so awful that it would explain why stocks started to sell off at 8:30. So I'll keep an eye out for that. Not really sure what's triggering that at this point. But right now, the S&P is down just 3 points, pretty much unchanged, although it was up a good amount before that happened. The Dow, meanwhile, is still in positive territory, up 68 points, 0.16% higher. Again, we saw a big decline right around the 8:30 mark. And I want to send a shout out to Ryan Dietrich on X, who posted this observation. I believe this is taken from the Wall Street Journal. He's saying the Dow has fallen 1,564 points during its 9-day losing run, with nearly half of that coming from United Health, which contributed 761 points to the drop. Look, guys, this is that Mangione guy, shooting that executive in the back, committing cold-blooded murder. It sent the whole freaking Dow down 761 points. Just that one story. It's causing people to take a hard look at the way United Health does business. And if you actually do look at the way United Health does business, well, they suck. As anybody who's ever done business with United Health knows, the executives are insider trading crooks. They rip off Medicare Advantage. And I hate to say anything good might come out of this story because I'm not condoning murder. Mangione is a POS, and I hope he rots in prison. But at the same time, the guy he killed was a POS too. And so, maybe some good does come out of this story. We need to take a hard look at what's going on in our insurance industry. But don't hold your breath on that one. If there's one thing our elected leaders are good at, it's doing nothing. Meanwhile, the NASDAQ is down 30 points, 0.14% lower. Again, a lot of that loss starting around 8:30 with the release of some of that economic data. Looking over at the U.S. dollar, modestly higher here, 106.98. That's up by 2 basis points. The DXY here is struggling to break through that 107 level. Keep an eye on that strong dollar there, guys. That's could potentially cause some problems in markets here. Looking over at the bond market, we've got yields are up on the long end of the curve and down on the short end here. The 30-year Treasury, 4.605. That's up 2.5 basis points. The 10-year, 4.403, up almost 2 points. The 2 years at 4.228. That's down a point and change. And the 1 month is at 4.327, down almost 2 points this morning. Again, the Fed probably going to cut by 25. Looking over at the commodities board, we got a mixed bag here. Spot gold is down $6 at $2,640. That's about 0.25% lower. Spot silver is at $30.25, down another 28 cents or 0.9% lower. I just had to open my big mouth about silver, didn't I? And it's down almost $2 ever since I freaking said something. Meanwhile, copper is up 42 or 0.42% here, about 18 cents higher. Platinum is down by 1.25%. So is palladium. And WTI is about 20 cents higher here for January futures, $70.23 for West Texas Intermediate crude oil. Looking over at Bitcoin, it's a little bit lower this morning here, $104,800 as priced on Coinbase. Yesterday, we hit a new all-time high of $108,388, and then we reversed a little bit. We're now sitting at $104,000. Almost 105. Bitcoin's price still moving to the upside here. Just wanted to show you guys this post from Zero Hedge. This is showing ETF inflows into the Bitcoin ETFs, those various ones. And ever since the election, or really since middle of October, we've seen a big uptake in the inflows to the ETFs. Now, that obviously took a huge surge after Election Day, but it's pretty steady here, guys, is the point here. You know, it wasn't a one and done with a big surge of flow into the ETFs following the election. This is actually like just regular daily volume, people piling in here. Now, you still have people leaving the Grayscale, right? The black one is consistently below zero. Grayscale's fees are too high, but most of it is going into the iShares ETF. That's the one that's managed by BlackRock. But Bitcoin ETFs are still driving Bitcoin prices higher, along, of course, with Michael Saylor's infinite money glitch over at MicroStrategy. Let's get the Fed out of the way, guys. It is Fed Day. The announcement will come out around 2 p.m. Eastern time today. A Fed rate cut is almost a sure thing, but watch the dot plot. This one in Barron's this morning. It's a near certainty among economists and investors that the Federal Reserve will lower interest rates for a third straight time on Wednesday. But what happens in 2025 remains a relative mystery. Official forecast for the year ahead should be revealing and will determine the market's reaction. So it's not about the cut, it's about future cuts at this point. In September, the so-called dot plot, or the summary of economic projections, sometimes they call it the SEP, the dot plot included median estimates that implied the Fed would lower rates by a full percentage point in 2024 and 2025. Since then, the unemployment rate has steadied and monthly inflation readings have come in hot. Wednesday's dot plot is likely to imply fewer cuts next year. Futures were pricing in just 0.5 percentage point of total easing in 2025 after a 0.25 point cut at the December 2024 meeting. In recent public remarks, several policymakers have sounded less confident that inflation will continue to decline to the Fed's 2% annual target in the coming months, and expressed growing support for a pause in interest rate cuts in the not-too-distant future. It's a setup for what Standard Chartered strategist Steve Englander called a hawkish cut, which is kind of something of an oxymoron. But so basically they're saying, yes, the Fed is going to cut, and that is going to be a dovish move. But if the Fed comes in with, say, Jay has some hawkish rhetoric and the SEP comes in and says, we're only going to cut 25 points next year now, the market would interpret that as a hawkish move, and we could see stocks sell off on that news. So it's more about what the Fed talks about going forward versus what they actually do today. Keep an eye on that. Nissan shares notched their best day in at least 40 years after reports on a potential mega merger with Honda. This story broke yesterday, and Nissan shares loved it. Nissan shares saw a record surge Wednesday following a media report that the struggling Japanese automaker is looking to merge with Honda Motor, forming a bigger entity that can compete with larger rivals and invest more in the growing market for electric vehicles. Stop. No. That's not what the market wants. The market does not want you to invest more in electric vehicles. Stop bringing Kathy Wood on your show to talk about EVs. It's not freaking happening. Anything EV is turning to shit. Oh my God. They are so freaking one-dimensional at CNBC. Sorry for that rant, guys, but good God, like, no. It's because they lost so much money on electric vehicles that they need to merge right now. It doesn't mean put more in. Oh, my God, they're so predictable. Nissan shares gained 23.7%, notching the firm's best day since at least 1985, according to data from FactSet. FactSet doesn't have records for the company's share price beyond 1985, though. Honda and Nissan are considering operating under a holding company and will soon sign a memorandum of understanding, according to a report in Nikkei. They plan to eventually bring Mitsubishi Motors in, which Nissan is the top shareholder of, with a 24% stake under the holding company, according to the report. Back in November, Nissan had posted downbeat results for its second quarter, ended in September, and slashed their full-year revenue and operating outlook. The automaker also announced plans to slash 9,000 jobs and cut global production capacity by a fifth amid fierce competition in major markets. So, Nissan is desperate here, guys. They need to merge in order to stay competitive. That's really the underlying story. It's not about more investments in electric vehicles. But a pretty good reaction out of Nissan stock yesterday, as we mentioned, up 23.7%. But you can just see it down here, guys. Even that big spike in the share price yesterday, it barely registers as a blip on this chart of year-to-date Nissan's performance, because Nissan has just done terribly year-to-date. They're down 24.6% for the year. Also going on this morning, let's talk about this one. Hong Kong builder New World asks banks to extend loan due dates. Never a good sign. And this article just gets worse and worse the more you read. Again, all you bottom callers in China, guys, it really doesn't look like the bottom is in yet. Distressed Hong Kong property firm New World Development Co. is in talks with banks to extend the due dates of some bilateral loans, people familiar with the matter said, adding to concerns over its ability to service one of the heaviest debt loads of its kind. It's unclear how much of a delay the builder is seeking for each loan, but the efforts show the company, which has total liabilities of 220 billion Hong Kong dollars, that's about 28.3 billion US, as of the end of June, they're exploring ways to alleviate financial pressure after recording its first annual loss in 2 decades. And again, that first annual loss in 2 decades, that doesn't pass the sniff test, guys. They should have been losing money for several years now. They've been hiding it. That's the thing. That's the problem. They're almost certainly going to find accounting fraud. When this company fails, I think it's only a matter of time here. Look, they're showing a couple of the bonds, what they're trading at here. You've got these notes due in 2029. It looks like they're trading at about 62 cents on the dollar here. This line shown in black. And then these perpetual bonds, they're trading at like 31 cents on the dollar here. So the face value of their debt, it's in the toilet here. This thing is already trading as if the company is about to go bankrupt. A big decline in just the last couple of days. Now, New World didn't immediately respond to a request for comment. They've also asked lenders to waive a potential breach of a debt ratio related covenant on certain facilities, said other people familiar with the situation. Man, these people familiar with the matter, they are everywhere, aren't they? DebtWire first reported the waiver request last Friday. Generally speaking, a loan breach might not lead to default if banks agree to grant a waiver, but it could undermine creditors' confidence in a company's debt servicing ability, hence that big decline in what their bonds are trading at. And then, of course, the real kicker comes in the last paragraph. The builder replaced its chief executive officer last month in an abrupt change. And this is why stocks always sell off big when the CEO abruptly resigns. It almost always means something really bad is coming. This story is no exception. The company named Echo Huang Shomei as CEO, replacing Eric Ma, who was in the job for only 2 months. Okay, I didn't even catch that the first time through the article. So the CEO abruptly resigned after 2 months on the job. The guy was like, oh, I'm so excited to be here. We're going to make great changes. It's going to be awesome. And then the first day on the job, he opens the books and he says, holy shit. And he quits 2 months later. You got to love it. Look, guys, the Chinese, by extension, Hong Kong, and we'll say the greater, Southeast Asia region, this development crisis is not over. These developers are still going belly up. The debt piles is still there. It's still a risk to banks because when you owe this much money, it's not just your problem. It's also the bank's problem. So people have been trying to call a bottom in China for like 2 years now. Still a long way off. Now let's talk about General Mills here. General Mills lowers profit outlook on price cuts. This is pretty interesting, and it's overshadowing an earnings beat. Cheerios maker General Mills lowered its profit outlook for fiscal 2025 in order to invest in price reductions to drive sales. The company now expects adjusted earnings per share in a range of between -3% to -1%, compared with the previous range of -1% to +1%. So they're lowering prices and they're cutting their forecast here. Shares aren't liking it, with shoppers purchasing fewer items at the supermarket after years of price increases squeezed budgets. Companies like General Mills have been forced to offer more discounts to shoppers. Food companies have been looking for ways to expand margins through operational efficiencies, which has also driven more interest in mergers and acquisitions. That's interesting. General Motors stock down 4.7% ahead of the opening bell here this morning, not liking that reduced outlook for the future here. Let's talk about Oklo. They target 12 gigawatts of new nuclear power through an agreement with a data center operator. And guys, I can tell you this story is nothing more than a sales pitch for Oklo stock. That's all this is. There is absolutely no substance to this story whatsoever. People don't get that. They're still piling into the shares here. Nuclear startup Oklo aims to deploy 12 gigawatts of power, 1.21 gigawatt, 12 gigawatts of power over the next 2 decades through a framework agreement with data center operator Switch, the company's announced Wednesday. Oklo would deploy what amounts to a fleet of small nuclear reactors through 2044. That's 20 years from now, guys. Are you buying the stock because they say they're going to do a thing sometime between now and 20 years from now? With power generation equivalent to the annual electricity consumption of more than 9 million households in the U.S. Oklo would develop, build, and operate the small nuclear plants. It would sell the electricity to Switch through a number of power purchase agreements for its data centers across the U.S. Oklo and Switch have not signed any individual power purchase agreements yet. That's because they can't, because right now there's essentially no chance these reactors get built, so you can't sell power from reactors that are never going to get built. But Oklo stock rose more than 10% in pre-market trading. The broad agreement signed by Oklo and Switch is a non-binding framework that sets high-level goals to execute against, Oklo CEO Jacob DeWitt told CNBC in an interview. It creates a vehicle to advance large-scale multi-site power development and deployment. No, it doesn't. It's a bunch of words on paper. It does not create a vehicle to advance large-scale multi-site power development. It's still not legal to build these reactors in the United States. The NRC has not allowed it to happen. They've rejected it twice. The only reason Oklo went public in the first place was because the NRC rejected their application, which meant the company was going to go broke if they didn't start selling pieces of themselves on the open market. And of course, Sam Altman swooped in with a whole bunch of money, bought up a big chunk of the company, and now he's running the company the same way he runs every other company, through press releases designed to sell stock. Oklo is a startup backed by OpenAI CEO Sam Altman that is developing micronuclear reactors. Altman is Oklo's chairman, and the company made its market debut in May through a merger with his SPAC, Alt-C Acquisition Corp. Oklo has a market cap of $2.33 billion. Look at this stock flying up 14% here. Again, guys, it's a non-binding, we hope one day, wishy-washy statement. It's got no force behind it, and there's no money changing hands. It's just a bunch of words on paper, and then they're copy-pasting that into a press release that is designed to get you to bid up the shares of the company. It is still illegal to build these reactors in the United States. Also going on this morning, House Republicans pitch a short-term budget deal ahead of the government shutdown, which would mean the government shutdown doesn't happen if they pass this. This is a 1,500-page bill that's got to be voted on in the next 3 days. This is a very Congress thing to do. House Republicans have released their version of a short-term budget proposal to prevent a government shutdown, with a vote expected just before the deadline. The measure includes $100 billion in emergency aid for hurricane and natural disaster recovery, $10 billion to support struggling farmers and maintain current spending levels for federal agencies. The bill also extends coverage of telehealth appointments for Medicare enrollees and caps earnings of companies that negotiate drug coverage by insurance. Additionally, it directs federal governments to fund rebuilding of the collapsed Francis Scott Key Bridge in Baltimore and transfer a plot of land from the National Park Service to the District of Columbia, potentially bringing the NFL's Washington Commanders from Maryland back to D.C. So you can kind of see that a couple of the high-powered congressmen are squeezing their own things like the Key Bridge and, bring what was the Washington Redskins back into the D.C. area. Look, this is to avoid a government shutdown. It's good that Congress is finally doing something about hurricane relief here. They've done Well, nothing up until this point, and the people in the Southeast are still suffering like in ridiculously high levels. That being said, I just hope they're careful with how they spend this money. I've seen this with Hurricane Sandy aid. We've seen this with the COVID stimulus. Anytime Congress throws money at the problem, most of it ends up stolen. I really genuinely hope that is not the case with this story this time around. And I just want to say thank you very much to Alex Gregory. Thank you, sir. Alex, he says, brace yourself for a soft landing. Yeah, put your head between your knees and kiss your butt goodbye for the soft landing. It's going to be really soft. Repo's almost done. I think you're referring to the reverse repo. And nobody talking BOJ. You know, it's interesting about the BOJ. The yen is weakening again. I think it's about 153 right now. But Alex, all of the language out of the BOJ for the last couple of weeks, months even, has been dovish. Like, we know we need to hike, but we're going to wait a little bit longer. We're probably not going to hike in December. Maybe we go in January, maybe not. If we do, it's going to be a small hike. So the whole unwind of the yen carry trade story, it's not over. I think a lot of people want it to be over, but it is on pause because you still got the Fed cutting, but the BOJ, they've stopped, you know, or at least they're on pause right now. So that remains a risk to markets right now. And that whole story about SoftBank yesterday and their $100 billion in investments into the United States when, you know, what's his name, Masa-san was standing next to Trump. That's, in my opinion, that's just like one big $100 billion yen carry trade he's talking about putting on, because SoftBank is probably going to borrow yen, roll them into dollars, and spend them here in the States. So, you know, the yen carry trade problem is probably getting bigger right now, not getting smaller. So you are right to raise awareness of these things, and everybody is whistling past the graveyard. You're absolutely right, Alex. Thank you, sir, for supporting the channel. Thank you to Atomic Coyote, who says, I would pay many dollars to see Sam Altman try to explain nuclear safety to naval reactors. Naval reactors is basically the military equivalent of the NRC, I believe. Atomic Coyote here, you're showing your a fellow nuke, I can tell, along with Mish there. Yeah, Sam Altman's leadership style, the way he does business, is just not compatible with nuclear power. It isn't. Sam Altman has no business being in the nuclear business. I really hope ACLO fails because I believe in nuclear energy. I think we should build more nuclear power plants, way more nuclear power plants in the United States, especially because we have so much natural gas here. We should build nukes, use them to power our grid, and then sell our natural gas to Europe, who's still run by idiot children, at a profit. I think that's what we should be doing here. That being said, Sam Altman, if he is allowed to control nuclear power plants, he'll cause some problem, and then it'll delay any construction of nuclear plants by another 10 years. All right. Let me just say it. Sam Altman is a piece of shit, and he should not be allowed to run a nuclear power. He shouldn't. He prioritizes production over safety. We can see it with what he's doing with AI and some of the nightmare stories from his safety people over at OpenAI who are all quitting. He should not be allowed to run a nuclear company. That's just my opinion. Thank you, Atomic Coyote, for supporting the channel. Appreciate that, sir. And thank you to Armando Ryz, who says, I have never seen so many CEOs, finance minister, and Janet Yellen's resign. Oh, and these scummy Republicans are trying to pass another bill. You know, Armando, I have mixed feelings on the bill. You know, 1,500 pages. Come on, guys. Do you really need 1,500 pages to send storm relief to the Southeast? Does it really require 1,500 pages? Or is it 10 pages of the stuff Americans really need, and then 1,490 pages of bullshit that all these congressmen are going to use to buy votes and to pay back people who made campaign contributions to them? That's the problem with the way Congress runs. Just an idea. While we're toying around ideas with things like term limits, how about page limits on our bills? How about if it can't be fit in something modest, say 50 pages, if you can't fit it in a 50-page bill, then you got to break it up into 2 bills. Just random ideas I just throw out there. 1,500-page bills with 3 days to vote on it. There's just no way you can read it and know what you're voting on. These guys are just blindly rubber stamping huge quantities of money, and then we all wonder where the money goes. And then we're like, I don't know where the Department of Defense, the Pentagon's $8 trillion that they can't account for. I have no idea where it went. So I share a lot of your frustrations, but I am glad that some of that relief is finally going to go to the Southeast because that is very much needed. Thanks again, Armando, for supporting the channel. And Break My Wallet Motorsport, I love that name. Thank you, sir, for supporting the channel. He says, Argentina I think we know their economy will get much better. The real question I want an answer to is, can Milei get reelected? I don't know, because the only things I read about Milei are through the filter of U.S. press. And the U.S. press really wants Milei to fail because the United States financial press in particular is run by Keynesians, and Milei is anti-Keynesian, very much so. I don't know if Milei is an outright Austrian, but I think he is. I've never heard him specifically reference Austrian economics. That being said, all the indicators are Argentina's economy, it's changing. Getting better, it depends on your outlook, right? Unemployment is spiking in Argentina right now. That's not getting better. More than half the country lives below the poverty line in Argentina right now, and that is up sharply from a year ago. So that's not necessarily getting better. So if you want to view it through that lens, which is what U.S. press will focus on, it's not getting better. That being said, Argentina's government has its first budget surplus in something like 15 years. That's getting better. Inflation is down from over 300% annualized to 166% annualized. So inflation has been cut in half in 1 year. That's getting better. So depending on how you look at things, some things are getting better, some things are getting worse. This is a dilemma. When you have a hopelessly indebted society, there is no problem solution. You have a dilemma. You have choices between two shitty options. You can keep inflating people to death, or you can enter a deflationary bust by being more responsible with your spending, but that causes higher unemployment and higher poverty. There is no easy out here. And unfortunately, because our press and our government officials are idiot children, and they act like every single issue that they vote on is a simple black and white, right versus wrong issue, you never actually acknowledge how hard these problems are to solve. So my gut tells me in the long run, Argentina's economy will get better, but there's a lot of pain they got to get through first. I hope right now it looks like the Argentinian people have the will to go through that, to come out the other side better, and I wish them luck, but it's not so cut and dry yet. Thank you very much, Break My Wallet Motorsport. Appreciate the support. JJ Watts says chances that during the next press conference, Yellen takes off her human mask and reveals to the world that she is an extraterrestrial from the planet QE. The QEnians, is that what we call them? She's the queen of the QEnian people, and the quantitative armed forces are about to storm the Capitol and sweep aside our petty human military defenses and rule the world with an iron reptilian fist and say, "You are all now my slaves. I am your empress forever, now and forever. Bow before your empress." Yeah, maybe Janet Yellen does that. Maybe she's been a reptile all along. And maybe that's an improvement over the current state. I don't know. But, hey, now we're thinking outside the box, JJ. By the way, the UFO UAP thing, this drone story, is getting so out of hand. They're lying to us so much that now you can't even tell. Like, now the UFO guys have gotten a hold of the story. And just shit. That's all. This whole drone thing in New Jersey, what a ridiculous story it is. I don't know if it's a big plot to get a DOD contract. Is it a foreign adversary? Is it armed military? My gut tells me they're probably ours. But the fact that we just can't get a straight answer from the government means the wackos are dominating the story, and it's getting old now. Like, FFS, defend our own airspace. Thank you very much, JJ. Matt Peterson says, people familiar with the matter say precious metals market manipulation lawsuit against BlackRock, Vanguard, and State Street. Will anything change? Matt, is that really happening, or is that a wish list there? This is the first I've heard of it, if that's really happening. Is there an actual precious metals lawsuit going on, or is that, I don't know. I wouldn't be surprised to see it. We know JP Morgan has done it. They basically copped to it. Hundreds of thousands of instances of spoofing. Wow. People familiar with, okay. I think that's probably a little bit of we're being hypothetical. I'm sorry, my sarcasm detector is a little out of cal. It's after 4 years of the 2020s, or almost 5 now. I'm a little desensitized to what is or isn't sarcasm. Will anything change? Hopefully one day, Matt. I remain optimistic. All right. I'm not hopeful, but I remain optimistic. This is me being optimistic. Can you tell? Thanks again, Matt. And Brojo 420's Cafe says, hard or soft landing? Where are we landing exactly? Look, I'm starting to notice a shift in the financial press. You're not hearing too much about soft landings these days. You are starting to see things like, I was just commenting to Mish, there was an article in Bloomberg this morning about Walmart and how struggling consumers are shopping at Walmart. and how Walmart is like the undisputed champion of this market. And I was just so shocked that Bloomberg is finally admitting that consumers are struggling after years and years of just outright gaslighting, denial, talking about strong and resilient and the healthy American consumer. It's almost like something has changed, and suddenly the financial press is willing to take off their soft landing goggles and talk about the economy for what it really is. What could have changed? That's interesting. Did something change? Maybe circa November 5th, did something change? And now all of a sudden they're willing to speak truth to power again. It's funny how that works, isn't it? Thank you very much, Bro Joe, for supporting the channel. And thank you to the Beekeeper, who says, how do you prevent 1,500-page bills? Veto any bill longer than 10 pages in length. I said, what did I say? Did I say 100 or did I say 50? I think 50 was what I threw out there. But Beekeeper, we're on the same page here. And it's there are not many pages in this book in which we are on the same page. Shorter bills, all right, term limits in Congress, some arbitrary limit to how long a piece of legislation is. And if it has to be more than that, you break it up into multiple bills and you vote on a piecemeal. I don't think that is an unreasonable thing. 1,500-page bills that are voted on 3 days after they're released, no, not reasonable. Something's got to change here, Beekeeper. So I like the way you think. I don't know. Did you send that chat before I said that out loud? I don't know. But yeah, definitely on the same page here. Thank you very much, Beekeeper, for supporting the channel and for the good vibes. Guys, thank you so much for having your coffee with us, Melonheads, this morning. I appreciate that very much. Thank you for all the super chats. Thank you also to my magnanimous Melonheads on YouTube and on Patreon. Looking forward to talking to you guys at 4 p.m. Eastern time today for our weekly get-together on Zoom. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.